and rock this house. Rock it. All right. We're going to go ahead and start ourselves out with a bit of a trade here this morning. May sound a little bit odd to you, but had a decent night overnight. Let me go ahead and change some of these things around real quick. I've been watching this one. I didn't take this sell on the pound overnight because I sold the euro on a London breakout because they kind of broke out at the same time. But I am willing to sell it now. It came up and it made a 78.6% retracement. And really what I was looking for up here is kind of a 3-bar reversal because I thought the pound could go lower today. We're in kind of a risk-on day. There are some things we can do to hedge this trade, but everything is kind of pointing. We had a good trade here on a head and shoulders break because of the ECB meeting that could have taken a profit. But out of all these that I'm looking at as far as what has changed, with all the moves that we had yesterday, and they were substantial, I think the pound has a good probability of at least retracing back down to the downside. And I was watching it as it made retracement back here up. And if you look at all the shadows on these candlesticks, there's quite a bit of selling pressure right at the 143 level. Every time it's kind of come up and hit its head on that 143 level, it's been experiencing some pretty serious reversals. It's always hard on something that if we would have taken the trade last night when it finally reversed course, it kind of gave a whipsaw. I actually went towards the euro last night overnight, but I do like the formations here. So I'm going to go ahead and start us off by selling one lot of the pound. And bring this, and close that out now. Whoops. Let's do this the other way. What happened down there? Oh, there it is. It's in. Cool. Actually got me in at a better price. Nice. The stop I'm going to put right up above this high, or entry 1.42841. I'll put it at 191. So that's a risk of 35 pips. And I'll put my limit in for a 1-to-1 risk reward, 42491. Oops, I guess that had to be 1.43 191 and a limit of 1.42 491. Basically risking 35 to make 35. Essentially trading into a retracement here and looking at dollar strength. I'm going to explain some things to those of you that weren't in our class this morning in the live trading room, or yesterday morning, I should say, on the ECB announcement. And for those of you that weren't in the afternoon class yesterday, kind of explain some things. But I'm going to watch this pound pretty close here. I don't want to give back too much because all in all, it's been a pretty good week based on essentially one trade. One other one that I'm looking at here that's actually I find quite interesting. And here we can go ahead and put the trade manager up there to kind of track this thing. So far down by our spread. I've been looking at this New Zealand, and one of the reasons why is because if we do have more of a risk-on day, I think that and it's been highly consolidated in through here. You can see the consolidation on New Zealand. And there's actually been quite a bit of buying pressure coming into it, and a lot of the commodity currencies have actually rallied quite a bit. New Zealand has stayed low. We had a big drop on New Zealand because they lowered their interest rates 25 basis points. But the thing is, we are looking at up markets today. We're looking at quite a few bullish type of scenarios going on in not only commodities but also in the higher yielding assets. And I think that might be enough on New Zealand. And this will also be kind of considered a dollar weakness trade right in through here to give this one a shot to the upside. If the dollar does weaken out, it could drive New Zealand up. And if the stock markets and higher yielding assets go up, it could be enough to bring New Zealand up to at least retrace a bit. I'm not saying that it's going to be a total reversal of trend, but it's a nice little spot with how consolidated it's been to look for at least a consolidation breakout. And if you have to favor one side or the other, all the way up and through this, it seems like it's been bid up, even though it's been consolidated. So if we got a breakout above these levels, buy entry would essentially be a break of consolidation, which would also be the 6,700 level and a +5 on the 1 hour T's. I would say put your stop right below this swing low down in here, 0.66702. And then put a limit in for 1-to-1 risk reward. So that one is looking pretty decent there. Sorry about that. I accidentally muted myself there. All right. So everything right now is pretty tight as far as the consolidation goes. I know I've gotten quite a few questions on what happened yesterday with the ECB meeting. For those that weren't there, I'll chat about that. It actually was for having a pretty successful trade yesterday. There was quite a bit of WTF moments yesterday to where it's odd. I explained it in the afternoon class, but it's kind of odd to have a trade where you actually make money, but it still frustrates you as much as the one yesterday. Let me go ahead and bring up the strategies for today here. There we go. Here was what when you look at the market from yesterday, and here's the euro dollar. This was the kind of the key component here. I was still short from that from a trade on Tuesday, and one thing that happened that was odd, most of you have already heard this, but those who haven't, was this was the 7 o'clock bar right down in here. And I kept a short position on all throughout this time. And when we opened up the market, when we opened up for our live trading yesterday, the one odd thing that happened was the fact that we usually meet at about 8:15 to trade the ECB announcement. And by the time 8:15 came around, this entire move had already happened. The reason why we usually meet at 8:15 is because at 7:45 the ECB will announce their interest rate, whether there's any changes to their interest rates. And then at 8:30 is generally when Draghi will come out and announce any plans for asset purchases or QE or the rest of the monetary policy. It was a little odd right in through here because at 7:45 they actually blew the bazooka out. They fired the bazooka early, and they announced, they cut all three of their interest rates. They cut their deposit rate 10 basis points. They cut their refi rate or their main interest rate to zero by taking it to zero, 5 basis points down. And also at that time announced their asset purchase program of raising their asset purchases 20 billion, which was above pretty much the consensus expectations, which was people thinking it would be 10 to 15 billion to 80 billion each month. And it actually did have a very strong move to the downside. When we met in class at 8:15, we went ahead and closed out the trade that we had short from Tuesday for plus 120 or 120 pips. I believe it was closer to like 125. So it was a good trade. And then the next bar opened, and it looked like it was about to come down and actually break through some support. The only thing is we started to see it climb a little bit, and then we saw bam, bam, bam. We saw this action right in through here occur. Essentially what happened was at 8:30, after Draghi came out in his press conference and started answering questions, he pretty much shot himself in the foot. And I'm sure he kind of regrets the verbiage he used. But I can show you on here, there's just really, and when people were pointing a finger at what happened, there was just really one thing that he said that pretty much took all of the goodwill out of his thing. I mean, even markets started to go down. Stock market started to sell off. It was up big on the QE announcement, and then all of a sudden markets started to sell off. The euro started to get stronger, which is exactly what they didn't want. All these things right in through here had made the euro get weaker. And then when Draghi was answering questions, he made this statement and when you look at it, the timing of when he made this statement, this is really what precipitated the large move to the upside on the euro. Bank does not see a need to cut rates further when asked about the future of interest rates. This is a big tonal shift from he should have basically just stuck with putting his gas down on the pedal and putting more swords in the dragon, if you will, after you've already slayed it, and he should have just stuck with his verbiage that he used in January and just said, we'll do whatever it takes. Whatever it takes. He should have just given very vanilla responses and said whatever it takes. But he said bank does not see a need to cut rates further, which precipitated this big move to the upside. And you can see there's been quite a bit of consolidation on the euro since then. We did get a breakout trade to the downside here when London opened. That actually could have been successful because it did come down and retrace back down again. Between the euro and the pound, all the European currencies basically went down. We had, obviously we see not down. The dollar got weaker versus all the European currencies. Bam, euro shot back up. The pound shot up after pound did the same thing as the euro. It started coming down precipitously. The Swiss shot up, the dollar Swiss shot up, and then Swiss got stronger. This was one of the craziest days that I've seen in the market in some time. The dollar actually remained strong versus the yen, but once the stock markets started to sell off is when the yen really started to move to the downside based on those comments. So you had quite a bit of, there was quite a bit of a seesaw effect yesterday, a whipsaw effect. One of those really weird trading days to where you're right. You're right on what specifics you thought were going to happen, but all it took was just one. It shows you how sensitive the markets are to central bankers. All it really took was just one statement, one statement from Draghi to kind of wipe out all of that from the markets. So when you're looking at, like, all of these have the potential to retrace, and all of them have the potential to go down further. When you look at the pound, the euro, and the Swiss, they've been kind of trading in tandem with one another. You know, if you're looking, we chose the pound just because I think it has a little bit, you know, it's coming off the retracement levels right over in here. And because of all the resistance that we saw here at the 4,300 level, I think sets us up for the best risk. You know, it's a one-to-one risk reward trade, but still has potential to retrace to the downside. Plus, with how much selling pressure there's been on it as it's approached that 4,300 level. But all of these have the potential to break out to the downside. It's just the pound kind of looked like the one that had the most oomph to it. You know, I was looking right down in here. Here was the 111 level, which we started to break through it down on the euro. And it's kind of come right back up here. But even on this, you know, if this were to come down and start breaking into lower lows, you could look for potential for retracements on this. You know, we already had a London breakout trade to the downside here on the euro, but, you know, it still has some room to go if it can come down and make a lower low. Same thing on the Swiss. When you look at the Swiss, pull that over real quick. The Swiss actually, when it was coming down, was making more of a divergence right down in here on the trend line. And you can see right here, came up and hit its head almost at that 9,900 level. And it's actually breaking down a little bit further here to the downside. The Swiss and the euro I'm kind of staying away from both of those just because, you know, they scare me a bit on the volatility. I think if there was one between the three that has the better potential for retracing to the downside, I think it's the pound, because the pound, I think, is showing the most pressure to come to get weaker versus the dollar. So, you know, as far as trades to go, today go, though, you know, the pound I would still consider to be a dollar strength trade. And essentially what we're looking at doing here is just really trading the dollar in either direction. I think that's kind of the best route to go, you know, starting off with going long the dollar versus the pound. I'm willing to give that one a shot. And then if we do experience some dollar weakness, even, you know, with the market being up as much as it is, the Dow futures are up 141. NASDAQ futures are up 45. So, I mean, they're all indicating a pretty big up move. When you look at all the markets in general, all the markets have recovered from yesterday. You know, all of Asia was up substantially. Europe was up big. DAX is up over 3%. Financial Times Stock Exchange up almost 2%. CAC's up 3%. So, I mean, you're getting a lot of big moves to the upside on the markets today, which kind of a last-ditch effort, I think, could, if the U.S. markets do open to the upside, could help the dollar, a bit today. Although not happening right now because it looks like we're getting a little bit of a downturn there on that pound. Let's see where the euro's at. Yeah, one of the things I liked about this one was the fact that see all these these shadows right here. These are all at approximately the 143 level. Plus with the downturn in the trend line and the PitView indicator, which is now starting to turn back up. I was essentially looking for the 78.6, and I was looking for it to kind of break through this low, almost like a 3-bar reversal type of situation. I'm not too terribly worried about sustaining a loss because it would still make it a pretty good trading week based on the handful of trades that we've had. We'll just have to watch and see what that does. The CAD had some news here this morning. It came out with the CAD initially weakened this morning, even though oil is up well over 2%. I think oil was up almost 3% at one time. And it came up, the CAD right down in here, for those of you who watch the CAD, it had gotten weaker here because they had their employment numbers came out this morning worse than expected. So it came up and retraced, and then now it's still going with the price of oil, which has been up substantially here actually today. Kind of see where's the Brent crude's up 1.5%. U.S. futures up 147. Crude's up 2% here. The W2 TI, so that's actually looking pretty decent there. And most of the commodity currencies are up pretty big here. But I'm not looking to go too crazy here today. Oops, that is the wrong thing there. I forgot to put that pound trade on there. And I think with both these trades in here, looking at New Zealand or the pound, I think it kind of puts you in kind of a hedge situation on both of these to where, if that New Zealand trade breaks, all we're looking for is just for it to break this consolidation. I wouldn't hesitate to be long New Zealand and short the pound because chances are one of those is probably going to hit a profit. If anything, you'd be looking at kind of a hedge scenario on that to where, your chances of one or the other hitting a profit are actually very good. It's one of the reasons why I'm looking at both of those. Because the pound kind of teeters back and forth from acting like acting like a European currency to then sometimes it acts like a commodity currency. But either way, it kind of favors the or was favoring the short side of the equation anyway. And once again, if I don't get anything by, I'll probably be closing up shop pretty early today. Because even if I get stopped out on the pound, it still makes me up puts me at like 85 pips for the week. After making actually it puts me at about 90 pips for the week after the trade from yesterday. So I'm willing to take that off the table here at the end of the week. But I'm willing to give it a little bit more risk. If I had to favor any side of the equation on euro, Swiss, and pound, I would like to favor the short side of the equation on the European currencies, just to see if they can't retrace back up just a little bit from their large moves today or yesterday. I'm sorry. However, if we can maintain the highs on a lot of these currencies as we go into next week, it may, even though fundamentally we have kind of a divergence between technicals and fundamentals right now. I consider myself to be more of a fundamental trader, which is probably why I like PitView so much, because it tracks the market makers and such. But in my opinion, IMHO, if you will, like my daughter would say, this fundamental divergence we're getting is that when you look at the European currencies, if you were a fundamental analyst, so to speak, fundamental direction is diverging from technical direction. Fundamentally, the euro should be going down. Fundamentally, the pound should be going down. Fundamentally, the Swiss should be going up. Fundamentally, the dollar yen should be going up. And technically, when you look at kind of just those four, they're all in but what's the trend? Well, the overall trend on the euro is up. The overall trend on the pound short term for the week is up. The overall trend on the dollar Swiss is down. So there's kind of a divergence between fundamentally where these currencies should be, and on the yen also it's down. Fundamentally on where these currencies should be, and then technically where these currencies should be. It's hard for me to leave fundamentals out of the back of my head, just because that's usually what starts the longer term trends in the market. Usually the most confidence we have in trades is when those things all match up together, when things kind of all match up both fundamentally and technically. And plus, when you think about it, the euro right now it should be acting more like a funding currency, as should the Swiss and the yen. And even with all the markets up across the board, overnight and into today, we're still not getting the big sell-offs that you would expect to happen on the euro and the Swiss and the yen to the extent of where the markets are. So just some food for thought there. Here at the end of the week, once again, I'm willing to give something, just a tiny bit back to the market, but not willing to give up a huge amount. I've been kind of concentrating on just doing one lotters lately. And when I do lose on trades, by the way, I did get an email from a student that said they had gotten crushed on one of the trades we did as a class. You should never get crushed when you lose on a trade. When I lose on a trade, it doesn't decimate my account. It doesn't make my account go down 10% or 15% or 20%. I don't lose half. Trading is all about having to absorb losses. You win some, you lose some, and you just got to manage your money effectively. Don't put more than 2 to 3% of your account at risk when it comes to your trading. You should never get crushed by an individual trade. Just want to throw that out there because that came from a student from Wednesday's class. All right. So right now these things are just really just going sideways. Markets just now opened up. It looks like we're in for a pretty big rally here at the beginning of the day. S&P's up 14, NASDAQ's up 44, Dow's up over 120 points right now. So it looks like we are experiencing a bit of a rally in the markets. And it looks like they're starting to go higher. So between those two, I like I like New Zealand because of how consolidated it is. It seems to me like it's kind of wound up like a rubber band. We'll see what happens with that pound. Might get stopped out on it. We shall see. We're about 10 pips away from getting stopped out there, but we'll see if that 143 level can hold, especially here now that the markets have opened. Seems like dollar's coming back a bit on the other pairs. We'll see if it comes back a bit on this pound pair. The pound has been coin flip trade as of late. It's almost like a back and forth battle that we have with the pound. Seems like we'll win a pound trade, then we'll lose a pound trade. We'll win a pound trade, and we'll lose a pound trade. That damn pound. So let me go ahead and I'll save this here. There's your worksheet for today. I've got to cut out a little bit early today, which is kind of what the reason for the fast live trading class, because I am going downtown Indianapolis today to watch the Big Ten tournament, the Big Ten basketball tournament. I got invited yesterday by a neighbor of mine, so I got to get ready to go to that. Probably good thing about having MetaTrader is I can have it on my phone and kind of watch and see what happens here. We're starting to get a little bit of an upswing here on New Zealand, so just keep an eye on that one. 6,700 is pretty much the level that we're looking at on New Zealand. So if we can get a nice little breakout there, it's already showing signs of wanting to go up. So keep an eye on that one. But shorter class here today. We'll watch and see what happens. And we will check back in next week. Mr. Wayhoff, I'll go ahead and I suppose I'll root for your Ohio State Buckeyes today, since they're playing Michigan State. So I will chat at everybody later. Thanks for coming in. And we just got stopped out, by the way, just an FYI. So anyway, pound got stopped out. My apologies. Sometimes we get the elevator, sometimes we get the shaft, and that one definitely shafted us. So no basics today. In fact, I don't think I had any on the schedule for today. I don't think I did anyway. We're no basic recordings today. We're doing basics. We'll start up again on the basics next Monday. So chat to everybody later. Thanks for coming in. Bye-bye.